The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, do we go into the breach, dear friends.
The following takes place between 2 p.m. and 3 p.m.
There they are. A little late on the upkeep today, but we'll figure it out. So as we start the show off, we're up 13.5 points on the S&P cash, 135 on the Dow. Nasdaq's up 43. And we had some earnings, kind of the first parts of earnings coming out and starting this show. And we got some more earnings kind of coming on in the near future. Now, tomorrow is really kind of it used to be Alcoa was the start of earnings, but tomorrow that's kind of the real start is JP Morgan, Wells Fargo, BlackRock, PNC, Infosystems. The rest are a lot of also rans. Don't have anything really on the way on Monday, but on Tuesday we get into Citigroup, United Health, Bank of the Ozarks, some also rans. You do have CSX though on Tuesday, so that's going to give you a little bit of an idea how many people are actually pushing things down the railways. Wednesday, we get into Bank of America, Goldman Sachs, Fastenal, U.S. Bank Corp. There's Mr. Alcoa after the bell on Wednesday. What else do we have? Thursday, we get into Morgan Stanley, J.B. Hunt for transportation, BB&T for more financials. PPE&G is going to give us a little idea how things are going in the car business. And what else? Big long list of also other rants. And that kind of gets us through the next 5 trading days. So we'll take a look at that. But I'm kind of surprised we're up a little bit here today. I thought for the most part we'd probably just go sideways and start seeing the movement tomorrow. But I think everybody's a little kind of giddish and euphoric in this market, which is normally a bad thing. But the problem is I just see more euphoria coming. We'll talk about that throughout the show. And with that, we're going to get the party started with a little bit of history.
And it's all just a little bit of history repeating.
On this day in 1935, the first flight of its kind, American Aviatrix. I'm sure I'm not pronouncing that. Aviation Tricks? Aviatrix? Airtrix? I'll have to think about it. Amelia Earhart departs Wheeler Field in Honolulu, Hawaii on a solo flight to North America. Hawaiian commercial interests offered $10,000 reward to whoever could accomplish this first flight. The next day, after traveling 2,400 miles in 18 hours, she safely landed at Oakland Airport in Oakland, California. 2 years after her Hawaiian flight, she attempted with a co-pilot, Mr. Frederick Noonan, to fly around the world, but her plane was lost on July 2nd, 1937, somewhere between New Guinea and Howland Island in the South Pacific. And what do we have in that? Well, she wasn't that great a pilot. One of the problems was that she was good, but she wasn't great. And she did a lot of things wrong. A lot of people have a lot of speculative theories about what happened to her. They did finally find, the only thing that we actually know is pieces of the cowling of the airplane were actually found on a small island. And so we can pretty much assume that she wasn't eaten up by a black hole and or shot down by the Japanese. But she was way off course when she got when they had the last communication with her. And actually, they were just listening. They couldn't. She couldn't hear on the way back. But big ocean, very easy to get lost out there. Not a lot of navigational aids, and rough weather. Other things can happen. But on this day in 1935, a little mark out there that would foreshadow what's going to happen in the near future. And we'll look at that. Okay, what else is going on in this day? Of course, Walmart, I think, is the big news today, boosting minimum wage from its U.S. employees to $11 an hour and dishing out bonuses of up to $1,000, creating and crediting President Trump's tax cuts for them, enabling the move. Today, we're building on investments we've been making in associates and their wages and skills development. Walmart CEO Doug McMillon said in a statement, "It's our people who make the difference, and we appreciate how they work hard to make every day easier for busy families." So a lot of self-serving stuff, but I was out eating lunch and had to go get some milk. So I wandered in there. I wanted to hear what the employees had to say. I quickly asked, as quick as I could, 20 of them as I wandered around the store, what they thought. And 5 of the 20 didn't hear anything about it, didn't know anything about it. The other 14 were pretty happy. The last one was ticked off because he missed a major bump in his by like a month or two. And he wasn't too fat. I was just wondering whether they even knew and or had heard about it. But most everybody pretty happy about it. One of the gals there had the little pin on that I knew she was 20 years. So I know she was going to get a Grover. That's $1,000 for you folks in Lutz. But interesting. But again, I don't want, there's not a lot of new news in the market to pound the table with. But, you know, come February 10th, I think it's February 10th. Maybe it's February 1st. I'll have to go back and look at it. All deductions from paychecks are going to see, for the most part, a $100 pop on average for people out there working. And, you know, is everybody going to get it? No. But if more than half the people get it, that's going to be a very tough thing to cut down on the enthusiasm and maybe the euphoria. Maybe it happens after it. Maybe it's sell on the news. But my guess is we're going to start seeing people have a little bit more cash, and they're going to do a few more things, and that's going to help out. Whether it's a check from the government or just a little bit more in your check, it's going to help out. A couple of the guys that I asked today in the Walmart store had just been hired for a couple of months, and they were starting off at $9 an hour. They were going to $11 an hour, and you know, probably doesn't sound a lot like that too much to us, but probably just an extra hamburger or two a week. But maybe it'll help them out. Kind of the big news, I think, of the day, and kind of hard to get all that depressed about the futures of the market. If you are thinking short in this market, I have the one and only sector that I see that has a problem, and we'll talk about that when we come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV, TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we are back. As I said before the break, there's one sector out here that is showing some weakness, and that is the REITs. One of the reasons that REITs are so important is every major recession, save one, and every major depression. I don't think we had a depression in 2001, and every single depression included massive destruction of wealth in the REIT community. I highlighted this in this morning's newsletter, but I think this is kind of important for everybody to understand. At least the REIT ETF out here broke an important low, did it so, and is below it. The volume was about the same, but the energy was certainly terrific off this latest high, 86.12 on the VNQ, which is the REIT business. 86.14, pretty much a straight shot down, save a couple of days, down to the 79.11 low of yesterday that spiked. We're still in that bottom of that candle. Now, could we get a bounce back up into that mid 79 range? I think we could, and that's going to tell us a lot in the next couple of days. But one of the reasons why REITs should be paid attention to, not because you're going to make a lot of money in the REIT business of ETFs, but REITs work in a very specific way, and that is that they buy a bunch of property, and as the property goes up, they remortgage it, and whatever they can get away with, they keep the extra money, and then they go buy yet another property. So it is kind of, in a way, the ultimate Ponzi scheme. Anytime the real big real estate, especially business real estate, pulls back, is highly problematic, because guess what? They're mortgaged to the hilt. And that's why in 1929, 70% of the losses in the stock market didn't come from Motorola or the high-tech businesses or the railroads or the rest. It was the utter destruction and bankruptcy of all these REITs that owned all the business properties across the nation. Since then, every major recession, the REITs have led in huge downsides. I think the losses in the REITs were approaching 80% of all long-term losses in the market from the debacle of 2008. And I think people are, at least economists, maybe people on Wall Street, are smart enough to put two and two together. They start seeing losses here. They know that they could possibly, but have not yet, affected the broader markets. So, we can take a look at it. Anyway, that's broke. I've seen a couple other ones that are broke. One of the reasons why I think maybe technology's gone as high as it can for a little while is an ETF that I talk about regularly, which is DLR, which is Digital Realty Trust. This has kind of come down, not quite busted everything you want. Yeah, and hence Glass-Steagall. And again, it's gone again, isn't it? So you got to wonder about these guys, but even Digital Realty Trust in San Francisco is looking a little peaked out here today. Looks like it's going to have enough volume to break its July 6th low. Now, does this just mean that maybe bonds and tax issues, maybe there's something else I'm unaware of? Yeah, it could be. And again, we've had a couple of down days that are kind of tough here, but we're probably going to bounce back up, I suspect. Give a little try. And if we get a failure next week in these, I think you're going to see at least more of the old brick and mortar kind of businesses have and probably worry just a little bit more now. Could this only be a peak because of interest rates? It certainly could. If interest rates are higher and it's harder to refi, what happens? You can't refi and then go yet buy another property. So the Ponzi scheme that is REITs, and that always has been, is problematic. Building's good, but again, what you need is basically in the business of business buildings, business real estate, is the bigger fool theory. You got to find somebody to buy it that will pay more for it in the bubble times than when interest rates are rising. And even just 1% over 1.5% over the next year would make big differences in this REITs. The question is, does that blow up the golden egg that the goose has laid? And I'll leave that up to you. Give me a call at 877-927-6648. Email me at path@tfnn.com. And of course, all kinds of stuff out here. Got, yep. Somebody says, did I look at DLR? It was in the newsletter this morning. So that's it. New text calculations. Okay. And this is from Pat. Says, this is an article saying that 90% of workers will have a bigger take-home pay under the withholding change. So I knew at least 50% were going to have more, significantly more than $100 every month. And I think that's kind of the way I'm looking at it. If you get $5 more a month, not a big deal. Maybe the other 40% are getting $5 or $10, but 50% are getting $100, and that's going to make all the difference in the world. It's kind of just like having a little bit of the Fed back. The difference is that this may actually cause a little bit more inflation as more goods are chased by more retail cash. So we'll take a look at it and let us know. Anyway, let's see. We got a couple of minutes left here. Wanted to look at some other ones. Wanted to see how Amazon's doing. You got a couple of these guys out here that are huge. Can they continue to just make yet another high? And the answer is yes on Amazon today. Again, we've had kind of stair-stepping down volume. Question is how volume comes in at the end of the day for Amazon. These things are kind of up here. Will they break? Yes. When will they break? Hard to tell. No signal yet on any of these. And let's take a quick look at Microsoft too. But as I went through the 52-week highs on Wednesday to kind of make a point. We've got a few of these things that haven't been able to make yet another high today. And Microsoft's one of those, kind of going a little sideways. But again, I'm thinking that maybe we've seen the big run in these FANG stocks. Maybe they go sideways. Maybe they get a little pull down. Maybe people get into some of the other sectors. And that's the question now after these big, huge runs and more cash being flushed into the economy. Where does everybody go from here? Wow, boy, I should have had that song from, what is it? Where do we go? Where do we go? What's the guy? Not Alice. I can't remember the group now. Someone probably knows. Where do we go from here? The guy with the top hat, I know is in it, plays the guitar. 1990s? Be back in a minute.
If you haven't tried David White's daily trading newsletter, The Path of Least Resistance, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Path of Least Resistance. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So where do we go from here?
Not the song.
Where do we go
Not
from
the song I was thinking of. And Guns N' Roses is what I was thinking of. Not this song. I don't know what this song is, but it's horrible. Get it off the air. Guns N' Roses with Slash. Where do we go? Where do we go? Anyway, Slash. Guns N' Roses. What about 1992? I'm going to say somewhere around there. Question about here is somebody's saying something about yet another blockchain. Can they set me up with them? And I'll send an email back to you on it. But no, I've written basically everything I need to know about blockchain. And that's kind of it. I don't think that there's a whole lot that I don't understand. I've written contracts in Ethereum. I've done all the examples. I know them in a way that few people do. I could actually make them work programmatically. So I don't know if there's a whole lot you can teach me about it. Maybe implementation, but that's about it. Okay, so we've got that. We've got that. Oh, I wanted to go through the list of 52-week highs again today. I did that on Wednesday just to make a point, and that is, okay, you get a 52-week high. Some of these things are pulling back. Do they give any kind of signal? Any kind of light high volume? Look like they're going to come back. Well, we'll just go through a handful of these again and see if there's anything out here. Now, at any one day, these things could reverse and give us a signal. The problem is they just haven't. And as I said on Wednesday, this may be the proverbial kettle that gets watched until it eventually boils. But that boil may come at the end of this year or on some other news that maybe happens. But even Alcoa, another 52-week high today, 57.13. Volume's not all that exciting. We'll find out tomorrow if that changes. But again, no sign yet of any kind of top. We looked at Adobe the other day. It was a little bit more interesting in the fact that it went up against its previous high and had just slightly lower volume, 1.8 million shares to 2 million shares back on the November 28th high. Energy was kind of interesting. To me, this is kind of a pattern you want to watch, but you need some kind of signal that says this thing's topped. It found a low on December 5th and it's gone up, but there wasn't that much energy into it. In fact, when you really look at it, let's zoom in here. Energy's kind of been going down in the way of volume, even though this thing's been kind of just drifting up slowly. Now, though these kind of things can last a lot longer than Mr. Keene, as he said, markets can remain a lot more irrational than you can remain, or markets can remain irrational a lot longer than you can remain solvent, is an issue. But volume's about the same, even if this last leg doesn't have a lot. If you wanted to buy this thing, you got a beautiful signal, and that was a 13 million share gap up on the 19th of October, 4.63 million shares on the December 5th low. So you basically came back, touched the gap, and that was it, and it went higher. So these kind of patterns are still working as long as volume continues to move. Am I saying these things continue to be tired? I think the answer is yes, but you're going to have to get something better out here to knock these down than what we have today, or at least something before the end of the day. Activision Blizzard, these things had been bouncing around through the fall, kind of a disappointing earnings season for the video game and esports businesses. Activision Blizzard, a little bit better today. Not the kind of juice, though, you would like to see. You'd like to see something around the 18, 20 million shares. You got about 5.5. But again, this thing looks like it's going to close higher, so does it matter? Boeing, another wonderful day to fly the friendly skies of Boeing. Mixed commercials there, isn't it? Boeing or I'm not going. Volume's up a little bit, or a little down today, yet you made another high. There's nothing out here, though, that says that there's a pullback coming. And that kind of makes me think a lot about Jesse Livermore's book, where he says, there's a difference between gambling and speculation. One of our guys in our den today has been talking about speculation and reference to Larry Pesavento. And I kind of think of it a little bit more of speculation to gambling. And with speculation, you think that you through study and effort, figure out that you have an edge on the market. And with gambling, you just say, okay, I'm going to throw a dart at these highs. Now, sometimes the volume's so low, you just say, hey, it's going to break. I'll go ahead and take the plunge. But it really hasn't been that bad in the general markets. Actually, it's been picking up a little bit. and it's been okay. So nothing out there that screams anything of the sort. But the big difference is waiting for inevitable advances or declines, or throwing darts out there and hoping these things come down and just don't go sideways, which is yet another problem. But nothing in that one. What do we have out here? BP, even the poor old BP that was busy flooding oil all over the Gulf is having a new 52-week high today. $43.55. Actually, this is on 2 years. And yeah, I mean, there's nothing back there in the rearview mirror that I can see. Again, we've got some broker dealers coming up here for earnings. We had a little pullback in the CBOE. Looks to me like little is the operative word out here. We just continue to go higher. And again, this one got a little doji out here. We've had some dojis. We really have not had that kind of pullback that says, you know, this is over. The gap down that gives you the island reversal, this one's not high enough to do it. But we had a bunch of them that gave a little pause, made me a little nervous. But again, I'm kind of waiting. I'm sitting on some fairly decent rewards, and they're going to have to give me a good signal to make me go away. And they have not yet. Other ones, Capital One Financials, we said starting broker dealers on Friday and banks, and we'll be seeing that all next week. Little doji out on this thing, volume's about half, but no sign that this thing is going to return below its close from yesterday. ConocoPhillips, yet another 52-week high today. This one, volume's right in line. And if you go back farther, this thing's got a gap that goes back to June 29th of 2015. And it's not significant other than the size of this thing. But that really kind of started this thing going off a cliff. And now it's finally back up here. Pretty decent volume today to go back through that gap down. So pretty good sign on ConocoPhillips. Credit Suisse finally getting fairly close to some resistance. This one's got resistance coming in at 19. We'll see how this does in the next couple of days. But again, nothing out here other than a couple of pops, some lighter volume. But again, we'll have to see at the end of the day what the volume brings. We'll look at a few more of these, a few other stocks out here. There are a couple with some bearish signals, so we'll take a look at them.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks! Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Where do we go? Where do we go?
Oh, I like this.
Where do we go from here?
Still not Slash and the rest of the guys, but that one was okay. Yeah, Chicago. And what else do we have? National Beverage. I got an email from a bear who said, can I just get a little morsel out here? And I said, yeah, we'll give you a little one. This one is off today a little bit. But again, not a huge volume stock. And actually, this thing looks a little bullish around 91. I think this thing wants to go back and test the 91.50 area again. And on that level, you might want to take a look at it. So that one's a little interesting. But again, I don't see a lot of pressure on the way back down here. And actually, this thing looks like it could be consolidating. On earnings news, KBH Homes was the one out here leading the pack, up 11%. This one, a huge sign of strength, and the second in a line of fairly decent gap ups. So my guess is that you'd be looking for one more gap up, maybe on earnings in 3 months, that would probably signal some kind of top in this thing. But it's got two really good gaps, and normally if you get two, about 80% of the chance of the time you get three. So I would be watching for that, which is one more big move on there. Delta Airlines also reporting to this morning, up almost 5% at 58.48. This one is breaking out. As we said yesterday, if this thing went higher, you have to look at this thing as a solid breakout. You've got the volume too. For a business that forever was going broke, kind of like the streaming music business, Spotify and Pandora and the rest, the amount of bodies that are out there that litter the wasteland of musical, there was a similar number for 40 years. In fact, Mr. William Buffett, in one of his wonderful turnarounds, for years said the best way to make $1 million is start with $2 million and buy an airline. He now, of course, is a big owner of airlines. So what can you say about that? Always says one thing, does another, but that's another one. His hypocrisy is legendary. Anyway, Delta Airlines, nice little pop out here today. You only needed about 8 million shares. You got 20 already, so everything you need, you got on that. So, what else do we have there? And I wanted to look at a handful of other ones. And questions on the SMH from somebody. A disembodied emailer who does not say, and I can't get a name out of them. We'll do it. Wants to look at this thing. And again, as we talked about, you really need to watch about how these things close below either the 9-day moving average or the 3x3. Yesterday, we said that maybe this thing was going to be saved, but it's right on the cusp. So the semis, could they be on the cusp of pulling back? Yeah, it could be. I certainly don't like the movement in the DLR telling you maybe there's some weakness in San Francisco. And of course, this one couldn't get back up and test its high. Does it? Do things turn around next week? Yeah, they could. Maybe this is, am I expecting huge moves down? I think if you were the most bearish in the world, I think 90 looks like massive support. So you're talking about maybe 10% down. I'd like to see a lot more to get into a short than 10% down. Now, maybe you can take one of the leveraged products and make this trade worth it. But, you're always one headline away from some good moves. And to me, when we look at other stocks like Intel that have been viciously beaten above the head and shoulders, you can make a case that this thing has bottomed. You notice that my machine has not burst into flames, nor have I been overrun by hackers this week. My computer's still working a week and change after they decided to drop the bombshell on everybody. I'm kind of making a rather bold prediction that in a month or 2 months, no one's going to remember even the names of these viruses. They will have come and gone fairly quickly. As I showed before, that my machine is fairly patched. So I'm not really worried about it. I back up everything every night. And the question is whether or not someone can snoop something from this machine. Well, I've taken precautions, which means that there's probably nothing on this machine that I could lose that would cause problems for me. I've got yet another machine that's basically on the internet via the cell phone and is not always on. It's basically my trading computer. It sits behind me on another desk. If I'm going to put in an order, I have to literally go over there and put it in, and the machine is then taken offline. So there's not a lot of opportunity for them to hack that machine. But even on this machine, not a lot of problems. Only problem I've had in the last week is Skype. Microsoft pushed out a new update yesterday that caused problems on the air. They sent me a new update this morning, and it seems fairly rock solid. So, is this going to be a whole Y2K thing all over again? And for the most part, I think the answer is probably yes. I don't think. Here's where you get into problems, and that's when everybody says it's not a problem. Everybody kind of is thinking that it is a problem. That's generally when it isn't a problem because everybody's looked at the problem. It's when everybody just totally dismisses one out of hand that these things tend to blow up in everybody's faces. And that's just the way of the world out there. I'm going to look at a couple other ones. You still have plenty of time to give me a call at 877-927-6648. Dollar General, 52-week high. Up and away in my beautiful balloon. This thing has a solid, beautiful candle out here today. What it does not have is the juice. It's down. You really wanted to see something like 6.5 million shares. You got about 1.6 million shares. So I can see where people are looking for dark clouds on the horizon on some of these. The downside is you need a signal, and maybe it happens, maybe it doesn't. But that's the difference between prudent speculation and gambling, and that is having an edge. I just don't see any that have developed. I'm more than willing to say that the REITs are the one weak link in all the sectors out there, and that's only about 1/10 of the S&P, so not that big a deal. Let's take a look at some of the other ones out here. Another one making a 52-week high is First Solar. And again, these things looked awful weak, and man, are they looking strong out here. But not exactly sure why, but certainly back up and over the March 18th high, 74.29. We'll be back in a minute.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. If you haven't tried David White's weekly investment newsletter, The Technology Insider, then this month is your perfect opportunity. On January 17th at 5 p.m., Dave will be hosting a special subscriber webinar where he'll be presenting on the newest feature in his newsletter, short-term sector charts that work on both the madness and wisdom of crowds. Join Dave on January 17th as he describes the method he uses to recognize these signals on a sector-by-sector basis, and as he discusses how he used this new tool to buy the gold miners in their seemingly darkest hour in December. And all new subscribers get a 30-day money-back guarantee, so you have nothing to risk. If you're a trader scouring the market for the next great trading opportunity, then now is a great time to sign up for the Technology Insider. For all the information and for details on Dave's subscriber event taking place January 17th, visit the front page of TFNN.com.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
We're going to go to Bill in Springfield. That's Springfield, Missouri, correct?
Yes, sir.
You bet. I want to go. I need to
Go
go
ahead.
back to Grizzly and that woodworking place you have up there in the northwest part of town. Man, I love that. That's the best woodworking place in the world I've ever found. But go ahead, Bill.
Yeah, okay, thank you. The utility index, XLU,
Mm-hmm.
looking at the charts, it seems like it's been pretty negative below the 9-day moving average and below all daily support. Is it not an indicator of the overall market direction?
No, it's hugely skewed because the California fires and all the lawsuits and the huge amounts of money that they're going to have to pay to get everything fixed. So this is a kind of an outlier in the chart. where you've actually got some kind of event that changed things. This is another one of these sectors where it's highly margined. They've got a lot of cash in these because they don't move very fast. But the downside was the huge amount of money that the California utilities are going to have to pay back. They've got lawsuits saying that maybe it wasn't someone throwing a cigarette around. Maybe it was lax maintenance by the companies themselves. These guys are in a world of hurt. And I think from what I read that for the utility sectors, 15% of this has to do with California utilities. So this one.
I heard about their problems out there with.
That's the problem. Yeah, that's the problem. You got those things. If you look at it, pretty much indicative with the problems that started when this thing fell over, and that is the problem. These things don't move very fast, but these things have given up huge amounts of profit because it takes forever to build that kind of infrastructure back again. So I would just say this one is kind of a mulligan, and you're going to have to wait a long time till this thing sorts itself out. Thanks for the phone call, Bill. We'll see you tomorrow,
right.
Same bat channel, same bat time. Remember to sow when you can, not when you have to.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.